There we go. I think we're all set. All right. I couldn't get my, there we go. I think we're all set. Hope everyone's doing well. Welcome to, there we go. We have some charts. Welcome to Charts and Coffee. We can't have charts and coffee without, well, the charts. Great to see everybody. Hope everyone's doing well. All right. Okay, so let's get to it. Let's get to it. Happy Tuesday. We have FOMC meeting minutes tomorrow. So no FOMC meeting for August. Those hardworking folks over at the Federal Reserve are taking some well-deserved R&R. That means that come September, we're going to find out what they have in mind. Remember, gang, at this point, when it comes to the Federal Reserve, do not be concerned about whether or not they're going to hike a half point, a three-quarter point. It really doesn't matter at this stage in the game. What does matter is where do we end up in December. Now, if you're in the options room or in the mastermind, the sector secrets, for the close, I went into an explanation of what it is we're tracking, what expectations are, and why equities will likely continue to climb as long as what I described, the current situation, the current environment, the current expectation for where the target rate probability is going to land come December. As long as that's the plan, we are in good shape in terms of continuing to look for those uptrends that are ready for a buy the dip opportunity. All right. So with that said, not a lot really on the calendar that's going to grab my attention. We know that we have, looking at Tuesday, not a whole heck of a lot of Canadian data. But if you've been watching ITB and XHB, if you're looking at those two corners of the market, those are the sectors for home builders, home construction, building permits, housing starts. We already got that. Take a look at the open for any kind of buy the dip in that corner of the market. I am looking bullishly at those sectors. And then we've got cap utilization in about 12 minutes. We have one of those oddball 9:15 a.m. hot zones. And if somebody nudges me around 9:15, I'll show you how I measure those pre-market releases. So somebody nudge me around 9:15. Hey, bot, maybe nudge me at 9:15. I'll show you all the intraday chart that I look at for if there is something interesting to do with that hot zone. All right. And remember, gang, scheduled, high impact, high volatility events, those are hot zones. They can be data releases, speeches, earnings, right? Options expiration, end of month, end of quarter. These are those scheduled events where we know there will be more shenanigans. All right. So with all that being said, let's get into it. After all, this show is about your questions. Otherwise, I'd just be talking to the cat. So thank you for being here. First up, Furman, how are you? Haven't seen you in a while. Good to have you back in the show. Hope everything's well. If you start the day with a bearish bias, well, let's take the if away. Let's talk about what we are going to start the day with. And that's going to be, to your point, depending on where we are in 25 minutes, I agree, bearish bias. We are below the line in the sand by a smidge. Can I speak to what would change my bias during the trading day? Oh, terrific question. From time to time, I'll kind of go a little bigger picture with some of the concepts. And this hits a really, really important one. And that is the different, what I call day trading windows. Okay. The day trading day isn't about trading the whole day. Most of you probably know that my preference is to trade the first 2 hours after the bell with a specific emphasis on the first hour after the bell to about 10:35 a.m. Eastern. There's different day trading windows. You've got your pre-market. You've got what I'll call just the AM. You want to avoid those midday doldrums, right? Then we have after about 1:35, you've got the PM session. Then you've got I would avoid the after hours. I don't care if there's earnings coming out. I'm not good. I don't hate my money so much. I'm going to throw it into the mosh pit. So I avoid all that stuff. But right around 8 p.m., we end up with the Asian session. Then we roll into the European session, the European Open, then we have the UK, and then right back around to, you guessed it, the pre-market. Every one of those windows, I'm reassessing what that window is beginning with in terms of sentiment. And remember, some of those are 4 windows really in just the US session if you include the pre-market. What's going to change my bias to bullish will be 2 things. All right. And I talked a lot about this in the day trading class. So this should be a great reminder for those of you that are either day trading with me in the morning in the mastermind, or if you took the class and yeah, Rob, what were those windows again? And how do I measure it? Always know where we are in relation to the previous session close, but do not let that override the structure on the 5 minutes. So if someone said, okay, Rog, what's the most important thing? The structure on the time frame that you are setting your trades up on. That's what's going to change my mind. Is that structure bullish, neutral, or bearish? Okay, so great question to kick off the show. Thanks, Furman. Hey there, Nick. How are you? Do I trade Bitcoin or Bitcoin ETFs? If so, which ETFs? So trade, Nick, to me, trade is a little bit more along the lines of, maybe a few weeks to a few months. I used to trade Bitcoin futures when Bitcoin was higher and a little bit more volatile. I haven't looked at the volatility. Hang on one second. Let me take a look here. I haven't looked at the volatility of Bitcoin in a minute, because if the volatility isn't there, Bitcoin versus US dollar, or the BTC Bitcoin futures, if the volatility isn't there, it's still pretty volatile. Then I won't consider the way in which I could find an opportunity to get a setup, a fill, and follow through. So I don't day trade them as much. I used to, but not as much now. But I will say, Nick, I believe in the Bitcoin narrative in terms of it's a very long-term time horizon. Very. When I say very, I'm willing to hold the Bitcoin that I bought in Q3 2016 for the next 25 years. It was a small bet that I made on what I called back then digital Forex. To me, Bitcoin made sense because it was one currency versus another, Bitcoin versus US dollar. Or, back then I owned some ridiculous coins too. Got to remember 2016. But the idea was having a very longer term time horizon. So that sort of takes me out of the trade mentality, but I don't mind to trade the futures, So this is my 2 cents again. Not that there's anything wrong with Bitcoin exchanges and doing the actual Bitcoin itself, sort of trading the spot, right? The only reason I avoid that is, when the CME says, here's a futures contract, I know there's going to be a better transparency in my mind. Gang, I'm no expert on cryptocurrency. Know that. I'm just saying that when the Chicago Merc said, look, we're going to give you a Bitcoin futures contract, to me, being a nearly lifelong futures trader, that gives me some confidence about execution and the brokerage. I've got leverage. And so that's my thinking, Nick. Bitcoin futures, or just I'm a hodler. I hodl, diamond hands when it comes to the underlying crypto. All right. Hope that helps, Nick. And again, I think of it as digital Forex. It's the anti-central bank trade. It's not a hedge against inflation and all that. I think that was way, way, way off the mark. It's a bet against central banks. It's what do they call it? DeFi. Or whatever, that decentralized. Yeah, that's the mentality. And I believe that's the true. And then of course, remember, this is where it gets really interesting. You start looking at NFTs. I know a lot of people say NFTs, I'm not saying that they're an investment. What I'm saying though is we're starting to see where this crypto experiment maps out to. It's pretty exciting. I will say it's pretty exciting. That doesn't keep me from trading crude oil and Apple. I think a lot of people think it's this binary choice. I can believe in a potential crypto narrative and still do the day trading and the swing trading and stocks and ETFs and futures that I do. So thank you for the question. Raghee, what are my top 3 watch list items today? I usually don't, Nancy, usually my top 3 watch list is going to be really more the habits, not symbols. So my habits are, what's the overall day trading sentiment for the morning? I already have a list of double green uptrends at the index, sector, and individual stock level that I'm waiting for pullbacks on. So if we get a pullback, if we get weakness on the broader averages, those symbols go into play. I would need a pretty beefy pullback. I'm not anticipating that till probably late August and into September. So my habits are, which of my double greens have proximity to maybe a fill? What's my day trading sentiment? Get that going. And then lastly, it's just continue to make sure that I'm monitoring my open positions. It's really easy to let the dopamine of a new position override managing the ones that we have. In managing them, not as a group, not by looking at my account balance or other such very bad habits, but looking at each individual trade as a brick within this wall that I'm building that is my trading. So managing them on the merit of each trade and not letting some overall increasing high watermark on my account balance fool me into mismanaging individual positions, whether that be scaling out of winners or whether that be cutting losers. So, my recommendation is always build the habits, and those habits are going to map to ultimately the result you're looking for. All right, next up, hey there, Robert. Comparing the HPMRs and the wave, which would you say is the better entry exit indicator? So, Robert, how many of you are Formula One fans maybe out there, racing fans of any sort? We know that the tires that they put on the car, right, are a reflection of what they expect for weather, what they expect for, what's going to work best, right? So I'm not going to compare a medium compound to a hard compound to rain slicks, right? They're all going to be different. They all have their uses, hammer, screwdriver, and whatever, nail gun. They all have their uses. So I don't compare tools in that way. There's no way to do that, Robert. But here's what I will tell you. Hourly price movement ranges, for those of you that don't know what an HPMR is, it's these zones on my screen that are showing me support and resistance ranges based on time and volatility. This is a process that I developed about a decade ago, starting in my beloved Forex and then mapping into more symbols that I have this data for. HPMRs work in any environment. It's just exhaustion. It's just support and resistance. That's all. Hourly price movement ranges can work in any environment, but the wave is for trends only. So you see how it's not even apples and oranges. It's not even apples and pineapples. It's what's my underlying environment? What are the conditions of the track? And then which tire is going to be best to get around. My thought is if I have a trend, the wave works, but the HPMRs still work. But if I don't have a trend, it's HPMRs. So that's the way we want to think about it. There's no best. It's really which one is the best match. There's no best in terms of indicator to indicator. It's just, am I matching it to track conditions, if you will. So I hope that makes sense. All right. Next up, SPY crossing the 200 on the daily. Is this an opportunity? SPY, well, it'd be ES that I'd look at. And Kay, I'm not sure what time frame. I'm guessing the daily. I look at the 200 exponential, and we crossed that on the 10th. Yeah, we crossed that on the 10th. So is a cross of the 200 intraday or end of day an opportunity? It's kind of the same answer. It's do we or do we not have a trend that would suggest that that threshold is one that could set up a trade? Hey, by the way, it's 9:15 and the bot just nudged me and I just wanted to show you. All right, so what I'm going to do is take a look at my intraday timeframes. I've kind of scrunched things in so that you can see the support and resistance that we're looking at. And if you take a look how much I have to squeeze prices in to even show you where the upper and lower ranges for volatility are as we go into the 9 to 10 o'clock hour. Are we seeing any major reaction to cap utilization? Nothing. And then by knowing what the upper and lower ranges are for time and volatility, I've got an idea if it's a big move or if it's a useful move or if it's heading towards exhaustion or not. So thanks to the nudge bot, it's just, this one's just a absolutely nothing. It's just a non-starter really for the cap utilization. So next up, I keep hearing don't get in now because the market is stretched, but market keeps going down and up. Is it waiting for me to get in to go down? So Maruf, it depends on the symbol. CHOP Chop is always, and we're still in either a very fresh uptrend or chop in the broader averages. Choppy markets are especially what they call a stock pickers market. That means we've got to be specific about the symbols that we're putting on our watch list. And those symbols are going to get there because of the behavior, the market trend or market structure. Those are interchangeable words. Whatever that structure or trend is, that would validate the reason it's on your list. So the idea here is what's stretched. Everyone's going to have a different opinion of stretched and not stretched. My issue is whoever, and I don't know who, Maruf, I am ridiculously, I don't listen to a lot of chatter out there because I don't know what their time horizons are. I don't know what their time frames are. I don't know what symbols they're looking at. So there's so much that I don't know about someone's analysis. And unfortunately, when I watch, for example, television, the rare instance that I do unmute it, they're given 2 or 3 minutes to have a discussion about a very complex thing called the market. If television were long form, it'd be really interesting. They give hedgies 20 minutes to put on their infomercials. It'd be a lot more interesting to let some legit traders and analysts would say decades of market experience, giving them that long form platform. But of course, television is short attention span theater, right? And we're just not going to get that luxury. So I don't know what anybody means when they say that because I don't know the context for that definition, for that label. And I love this. I write this down and I remind myself, I know it's impossible. Can you read that? It says, wisdom begins with a definition of terms. That's Socrates. Pretty smart dude. And that's, for me, kind of the answer to that. Wisdom begins with a definition of terms. I don't know what stretched actually means. So find a trend, wait for it to pull back. That's my thought. If you want a little bit more discernment, find a stock that's in a sector that's trending. So you've got both the boat and the tide working to the upside, and then wait for a pullback. So I hope that helps. Unless I know what that means in the context of time frame and time horizon, remember, it's just a word. And then now we're having to fill in the definition. Well, we may be completely off about what that means for that person. So just food for thought. The SPY hit the 200 SMA yesterday, looking for a retracement. Again, if I'm going to measure SPY, gang, I'm going to measure ES, because remember, SPY, it's an incorrect. It's an incomplete view, meaning it's only a 9:30 to 4. So while I will oftentimes day trade SPY and even swing trade SPY, so day trade meaning flat at the end of the day, swing trade with a time horizon of days to weeks or whatever expiration, getting out in front of the expiry of the option, I'm going to set that trade up in the ES. The ES took out, my version of the 200 is the EMA, but SMAs are powerful too. I think they're both quite powerful. I think it's very telling that on the 10th, with a large candle, we took out the 200 exponential. And that, again, within the context of where we are, we're in an uptrend. So overall, my approach is, if we do exhaust at the 200, cool, but it's not a trend for me because I'm not allowed to short in an uptrend. So it doesn't mean that there may not be a setup. You might be very well right, George, but I've got to stick with my rules and my guidelines. And my rules and guidelines say, Rag, first guideline, what is the underlying market trend? Second is, if it's an uptrend, that's it. I'm looking to the long side. I'm rooting for the bears, though, because I need a pullback. So sometimes the most bullish thing you can be is rooting for the other team because I need that pullback. So I hope that makes sense. All right, gang. That show sure does go by quick. Thank you for the excellent questions. Have an awesome day. I'll see you tomorrow, same time, same station, for Charts and Coffee. All right, gang. Get out there and caffeinate and dominate. Be good to each other. I'll see you tomorrow.